Hello and welcome back to the ROI Podcast, the podcast that's obsessed with the art and science of return on investment. And back by popular demand, we have our friend, the unemployed value degen. We are going to talk today briefly. You've all been asking me in the comments about New Fortress Energy. We finally got some updates for you guys, so I hope you're happy. We're going to chat about that briefly, and then Professor Value Degen is going to tell us all about a couple of stocks he's got his eye on, which I know nothing about. So I will be learning and taking notes along with the rest of you. It's my great pleasure to invite you back onto the show. How are you doing, sir? What is going on?
Oh, I'm doing fantastic. Although it might it's one of those days in Florida where it's sunny on one side of the house and it's going to rain on the other side of the house. It's I've got thunder and lightning on one side and bright blue skies on the other. So we'll see what happens.
Okay, well, it's freezing where I am, so I'm inside with fairly rugged up with the fleece. Let's get straight to it. So all of the Twitter degens, and I say that with great affection because I'm one of them. I'm looking at New Fortress Energy, and it's blowing up. The news is going on. Fast LNG works, and a lot of people have been sweating on this. I wrote an article on NFE months back. You and I chatted about this and collaborated with possibly the greatest article in the world. I love the tribute headline. New Fortress Energy, give us your overview and your take on the company, and then we'll go back and forth before leading into some of the other opportunities that you've identified today.
Yeah, this was a fun one. Thank you for pointing it out to me. I wouldn't have gone looking here because I might have a bias against jurisdiction risk. I might be comfy in the United States, but
Such
the
a
United
gringo.
States,
It's such a gringo.
yeah, sometimes. I was the first white guy in my high school to take honors Spanish 5, so I'm not that big of a gringo. So, but uh, yeah, I don't like jurisdictional risk. It's not rational. It's more of a bias. But in the United States and the developed countries, they're so anti-fossil fuels. You saw what Australia did with extra taxes on coal. You have permits getting denied. So meanwhile, in the global South, the countries realize cheap energy is the cornerstone of their whole economy. So in this case, I wouldn't have gone looking for jurisdictional risk, but in fossil fuels, it might make sense. New Fortress Energy, so we'll go back to the shale associated gas. I know there's some doomers out there that think that the output of the Permian is going to collapse, and then we're going to see $200 oil and natural gas prices are going to go up. Maybe that'll happen, but there's another possibility that just these drillers just won't stop drilling. They'll just keep on drilling and drilling and drilling, and we'll have so much natural gas that the price in the United States will stay cheap. And that was the thesis. I did a write-up on CVR Partners, a fertilizer company that uses natural gas as an input. So, well, if this is going to stay cheap, why not take advantage of companies that are going to have a benefit from cheap gas? Well, New Fortress Energy, kind of copying Warren Buffett. Warren Buffett went out there and bought a liquefaction terminal in Maryland. New Fortress Energy built a floating liquefaction terminal so that they can buy domestic U.S. gas and turn it into LNG. And they built this thing in 3 years, which is very fast in this world. And Twitter is all a buzz about the very first cargo is being loaded today. So that's what everybody's talking about. But and they do stand to profit from that. That is a good spot to be. But New Fortress Energy's main business is they go all the way down to the level of providing electricity in the country. So they'll actually build out the power plants and provide the megawatts. And this is what everybody likes about Cameco's acquisition of Westinghouse. Well, it's one thing to mine uranium, but if you deliver electricity to the end consumer, you capture all that value. So New Fortress Energy is going to buy cheap domestic U.S. gas and then sell, megawatt hours in Brazil and Puerto Rico and Nicaragua and Mexico. And I think that's a fantastic. Oh, go ahead.
Potentially Ireland as well.
Yeah. Yeah, I didn't see a timeline on that. I really like, although I wrote an article called "When the Stocks You Love Don't Love You Back," and I really liked Vermilion Energy, but they also just won't stop drilling. But they have a bit of a natural gas monopoly in Ireland. I didn't see a timeline. If that if that project was approved or if there was a timeline to actually implement it. I couldn't find anything on that, but they might deliver in Ireland. But no, I think it's a fantastic part of the value chain. I really like it. I put up a post today about it, made fun of Tenacious D a little bit, and with their song Tribute. I don't want to go in too much of the details because I think I found something interesting in the accounting, and they're currently bidding on more contracts. Not that I have any power to move the market, but I think I found something that they were trying to hide, and I don't want to tell their competitors what's going on. So maybe if you want to pay me $5 a month for the hot stock tips and look behind the paywall, but I'm very enthusiastic about New Fortress Energy.
Indeed. A couple of comments before we move on. For God's sake, pay the man $5 a month. It's definitely worth it. But you mentioned a few things. So this is a $5 billion market cap company. So it's not huge, but 12 billion in enterprise value. It's the only real player vertically integrated doing this stuff. When natural gas in the US is at historically cheap levels, Europe went through the whole panic situation a couple of years ago. You say it might just be overlooked. How the hell is this thing being overlooked? Is this just my bad habit of being early again? I'm getting sick of it, Stephen. I'm getting sick of it.
No, I think everything's overlooked now because you have half of the market is passive. The half that isn't passive is quantitative. So if there are things that don't show up in trailing 12-month numbers, like for example, New Fortress Energy, they just spent $3 billion on capex last year. They're probably going to spend $1.5 billion on capex this year. Well, that's a $1.5 billion cash flow swing. That's important. That's meaningful. But if you're just using multivariate regressions to tell you what to buy, you'd never see that. You have to actually list. You have to be a human being listening to the company. So I think there's a lot of that going on. That only 40% of the people that aren't ETFs, only 40% of active managers aren't quantitatively driven. The rest are just taking results of regressions and buying those things. So if you see a fundamental change in a company that doesn't show up in the numbers, there's really nobody looking for it. And then what surprises me is sometimes it takes a couple of years before you have enough trailing 12-month data that looks good for all the quantitative strategies to come in. So you can feel really stupid and really early for a long time, and then suddenly it'll triple in a day.
Took me a little while to get comfortable with that, but it's certainly been my experience. I'll only throw out numbers that are public, so we're not groundbreaking anything here. But if I'm looking at some track record and projections, top line revenue growing at a CAGR out to 2028 of 43% year on year. This is not a tech company, guys. This is an infrastructure utility company. I want to talk a little bit about that. I want to talk about what sort of multiple you think this thing would get were it to be considered an infrastructure company or a utility company, because it arguably could be both. What sort of multiples can this thing get?
Well, because they go all the way to the power plant. Even in the Brazilian stock market, some of the Brazilian utilities have a price to earnings of 18. And that's enormous. In the natural gas, in the fossil fuel space, you have all these ESG directives and nobody's allowed to own it. And so the multiples are, a price to earnings of 5 or a price to earnings of 6. But if you're a utility or a price to earnings of 18, that's a huge multiple re-rating. And that's not including the growth. Their net income has doubled every year for the last 3 years. It went from 50 cents to $1 to $2.50, and it's supposed to be $5 this year. So more than doubling net income every year for 4 years. And then you're going to potentially go from a multiple re-rating from being a fossil fuel stock to a utility company. That's a huge multiple re-rating if they can achieve it. And they have a plan to do an IPO of their Brazilian business in Brazil, because if Brazilian utilities are trading at a PE of 18, why not? It makes a lot of sense.
Yeah, I agree. All very, very sound fundamental analysis. And your reward for holding the stock over the last 3 years has been a 28.5% price decline. And that's including the bump up today, and a 19.5% decline over the last year. I got lucky. I traded in and out around this. It's the only time I've ever done that successfully. So for the love of God, please don't copy me there. In the sense that this thing, there were question marks about what they were going to do with the capital. And I got a little nervous around, this is wonderful, they're going to make lots of money, but what are they going to do with it? It's not about how much money they make, it's how much money comes back to me. What are your potential thoughts on their options for capital allocation?
I haven't heard anything from, I only went back a couple of quarters, but I didn't hear management detail out what they would do when they return capital to shareholders, if they would focus on buybacks or dividends. The CEO owns 15% of the company. And whenever you have a CEO that owns that much, if they focus exclusively on share buybacks, then you're just on a short runway before he owns the whole thing. So I know there's a lot of preference for share buybacks over dividends, but when a CEO has such a large ownership percentage, maybe dividends make more sense. But they're still going to spend $1.5 billion a year on capex. They've got more expansion to do in Puerto Rico, more to do in Brazil. Who knows if there's other Caribbean island countries that want to get on the train and start having cheaper electricity.
Sounds good. Holdings as of today, Wes's shares are worth roughly 23% of shares outstanding